When you think about investments, you typically hear advice about putting your money in a 401k or a Roth IRA or even in stocks, but you probably haven't heard much about how you could actually use your HSA as a third retirement investment fund. Now, you might be thinking, isn't an HSA just a health savings account? Can't you only use it on medical expenses? Actually, no. You can invest your HSA contributions into an investment fund pretty easily through your account provider. And then you could use that money when you retire on non-medical expenses as long as you are over the age of 65 and pay taxes on it when you pull it out. Now, you could also use that money for tax-free medical expenses as well. It really depends on your situation or preference. But this basically acts as a third retirement fund outside of your 401k and Roth IRA if you have those already. So in this video, we're gonna go over my personal financial setup, everything from a 401k to an HSA, and then we're gonna dive into exactly what an HSA is and why it has advantages. And finally, I'm gonna show you exactly how to set up an HSA to invest it through Fidelity because it's a lot easier than you might think. Now, before we jump into the depths of HSAs, I do want to go over my financial system, how I have everything set up, because it will help you get a bigger picture of how everything kind of works together. It's actually based on the book I Will Teach You to Be Rich by Ramit Sethi. Now, this is one of the best financial books to start with. I read this when I was about 22, 23. I know it has a weird title, like a very clickbaity title, but it helps you set up everything and then also automate all your systems as well. My system starts with a paycheck. Now, this paycheck hasn't actually reached my checking account yet. So there's a couple things that are pulled out of my paycheck before it even hits my checking account. I have it set up so it takes about 11% and puts it into my company's 401k plan, which I set up when I first started at the company. And then I also put about 5% into the ESPP program. Now, this is an employee stock purchase program, so I'm basically buying my company's stock at a discount. This is available to some people at larger corporations. Then I put around 3% into an HSA plan, which basically is a healthcare benefit that a company may offer to you for a high deductible healthcare plan. So if you sign up for one of those plans, you can get your HSA. Now, this comes around once a year when you have to do your healthcare elections at your company. Now, notice this is all done before the paycheck has even entered my hands, right? So this is all automated by my company. They will distribute it. I have access to logins and can change my contributions once a year when elections come up. But for the most part, it's pretty hands-off. And eventually they hand me a pay stub, right? So they will do a direct deposit into a checking account. And this is money that already has a little bit of taxes pulled out of it. And now it's just cash for me to use. And then from then on, it's all me. So now it's up to me to figure out where else I want to save or spend my money. So I end up putting another 5% into a Roth IRA. Now notice this isn't before it hits my checking account, right? This is after it's already been taxed, it's in my checking account, and then I will then set up a Roth IRA, which I did when I was like 22, and put some money away there as well. Then I'll put another 5% into a high yield checking or savings account. And this is nice because then you have the cash more on demand rather than stuck in investments. Then whatever is left over, I basically use for rent and then paying off credit cards, which is just my day-to-day expenses like food and other things like that. I do also have a car payment and a couple other things like student loans, but I'm not gonna put them on this graph here because again, that just falls under the category of my individual spending. There's not really investing at that point. Now that is my financial system flow. Now I know it might seem like I'm saving like a mass amount of money. You don't have to save this high of a percentage. Basically, when I was like 22 or 23, I was only putting in like $20 a month into my Roth IRA. Like you can start really small and then slowly increase it. Also keep in mind that this is automated. So I don't do any of this manually. This all is automated. So when I get paid on the 1st, it will then pull money and put it in my Roth IRA for me, right? Or pull money and put it into my savings account for me. I have it all set up through these services so that I don't actually have to manually move money. Now that you have seen the financial system and kind of the big picture to see where everything kind of fits into place, let's talk a little bit more about HSAs. You'll notice people tend to use HSAs for tax-free medical expenses. You have to be enrolled in a high deductible health plan, which means that you're paying a lot more out of pocket when you go to the doctor. There is actually an individual limit, which is about $4,150 for the year of 2024, so you can't contribute more than that amount. But not a lot of people know that you can actually invest your HSA. Now there's a couple advantages to this, like your contributions are tax deductible, so you aren't being taxed on your contributions. Your earnings are also tax-free, so you're not being taxed on what you earn within your investment fund in your HSA. And withdrawals are tax-free as long as they're used for medical expenses. But what a lot of people don't know is that when you turn 65, you can use that money on anything outside of medical expenses. So it basically becomes a third retirement account, but you are taxed if you aren't going to use it on medical expenses. And I was curious how an HSA lines up with the other investment funds like a 401k or a Roth IRA. So I read through a ton of articles, and I will link them below for reference. And I made this little chart that will show us kind of the differences between the three different funds. So in order to be eligible for an HSA, you actually have to be enrolled in a high deductible plan or an HSA available plan. Again, this means that you're going to be paying a little bit more out of pocket is what it will feel like, because when you go to the doctor, it won't be that $20 copay, it'll be more like $400. So it takes a little bit of getting used to. So again, look at your options before deciding to go with an HSA. As compared to a 401k, again, you have to be employed at a business that offers a 401k, and then sometimes they even match a certain percentage of your contributions. The big difference with a Roth IRA is in order to be eligible, you have to make less than $146,000. There's a way to calculate this as well. This is based on 2024. I'll link below because it's like your gross income, and it's kind of an interesting calculation, so I'll link it below. Now, your contribution to an HSA is tax deductible, and so is your 401k as well. That is also tax deductible, except for with a 401k, you do have to pay FICA taxes. As compared with a Roth IRA, which is taxable contributions, and that's mainly because, again, you're getting your paycheck coming into your checking account, so that money has already been taxed, and then you're throwing it into a Roth IRA. And when it comes to withdrawals, which is sometimes referred to as distributions, an HSA is tax-free as long as you use it on medical expenses. But again, if you're 65 and you want to pull it out, it's just going to be taxed and you can use it on anything. Compared to a 401k, that is taxable. And lastly, your Roth IRA is tax-free. Again, because it was tax going in, it's not tax coming out. That's kind of how I remember it, but there's all kinds of weird exceptions and stuff, so I will link the IRS link to how the Roth IRA works as well. But again, I'm not a financial expert or advisor, so I'm just trying to do a high-level summary and kind of a quick comparison between the three, and I will link all my articles and references below. Now that we have a feel for how HSAs work and what the advantages are, let's walk through how to do this step-by-step in an actual brokerage account. Now, the steps may vary depending on who is handling your HSA, but Fidelity is really popular, so we'll just start with that one. So I've opened my friend's Fidelity account, and I was kind of trying to show them how to do this. Now, when you open up Fidelity and you go to your health savings account, usually you'll have your accounts on the left, you will find a button, and depending on where you are, whether it's Vanguard or Fidelity or any other brokerage account, you're gonna look for something that says Invest My Future Payroll Contributions. So you can see this is right here. It's kind of in a weird space, so you're just gonna go ahead and click that, and it should take you to this menu where it starts to ask you a bunch of questions. It says, what is the source of this money? And you're gonna say, payroll contribution, right? Where will the money be transferred? And then you're gonna say, I want it transferred here. And then, would you like to automatically invest your future HSA contributions? You're gonna say yes. And then it's gonna ask for an investment trigger. So this is sometimes referred to as, would you want a certain amount of money in your HSA and then contribute? Or do you wanna just contribute everything? So a lot of people say, okay, start moving stuff into investment after I have $5,000 or something like this. Now this person doesn't need that much, so they were like, just invest it all. So then you would select that. And then on the next screen, after you select everything, you're gonna pick a fund. And you can pick any fund. Do your research, do your homework. I tend to go for target date funds. And again, that's in the book, I Will Teach You to Be Rich. He talks a little bit about how that is very easy because it targets a date, and I do 2060 because that's when I'm gonna retire. It starts moving your investments into safer things as you get closer to 2060. So it's like targeting a date. So I tend to do a lot of my stuff in target date funds because they're easy, low maintenance. I don't have to ever change it again. But again, do your research and do whatever feels best for you. Just know that there are limited options on which mutual fund you can put your money into for an HSA. But other than that, it's like super easy. It's only like a handful of clicks. You just have to make sure that you want an HSA plan, you're okay with having a high deductible healthcare plan, and that you're willing to invest your money into an HSA. It really just depends on your preferences and situation on how you want your investments to go. Hopefully this gave you a better idea of the options you have available to you and make it a little bit less scary and gatekeepy. I feel like people are like, oh, invest this, but it's like, what does that mean? In my mind, I'm like, it's just a click. You're just clicking, and then you're reading about the fund that it's going into. So it's not as difficult as people like make it out to be. Now, if you're into money and investments like me, you might want to check out the book Die with Zero, because I used to think that investing was like investing every last penny and dime and nickel that you have. But then the author actually talked about investing in experiences, talking about how you can invest in memories and things that you wouldn't really think about because you're not thinking like super logically. And it is one of the main things that has changed my mind about money, and just letting a little bit loose of the restraints that I put on myself to just live a little bit in my 20s. I have a whole video about it, so I will link it up here. Otherwise, I will see you guys next time.